Is hey Natasha Phoenix, good to see you. So good to see you today. All right, so give me a second here. I'm pulling up some stuff because I'm actually gonna make some investments myself while we're talking. So right now the stock market is doing good. It's solid. I think it's up today because a lot of people are anticipating that the Federal Reserve is going to lower interest rates by a full 50 basis points. I'm not convinced of that. I think that might be a little bit too much optimism, but a lot of people are banking on this. They said that the odds of the Fed increasing interest rates, or sorry, reducing interest rates by 50 basis points are 59%, which again is very surprising to me because I have no idea why they came to this conclusion. Why is this important and what's going on? Well, basically, inflation is now officially considered dead in the sense that the inflation problem has been solved, and we now feel comfortable about where we are as an economy. And you have to get rid of inflation before you start lowering interest rates, or it'll only make your inflation problem worse. So the Fed feels like the inflation problem is gone, and that we could be hitting a new issue with economic growth. That economic growth may not be what we thought it was going to be. And if that happens, then you'd want to go ahead and have your interest rate cuts in so you can stimulate the economy, provide some liquidity, get the market going. I don't, I'm not even convinced that we need even one cut, let alone a full 50 basis point cut. But because the consensus is now there's a 59% chance that there's going to be a 50% cut, the Fed is running into another dilemma. And the dilemma is that if they don't do a 50 basis point cut, there could be an economic disappointment. So the economy and the stock market could be disappointed, which could cause other issues because when stock prices drop, that reduces liquidity in the economy. That can cause some economic problems. And but then there's the other thing that says that if they overcut, it could send a bad signal that the Fed is worried about the economy. And the crazy thing about the economy is that to some extent, it's a self-fulfilling prophecy. Basically, if the people watching the economy that are also watching the Fed believe the Fed thinks that there's something wrong with the economy, then they're all going to think something's wrong with the economy. And if they think something's wrong with the economy, then that's going to hurt the economy. So it's kind of crazy that the economy does well when we feel good about it, and it does poorly when we don't feel good about it. So sort of keep that in mind. Now, if you want to know, I'm going to grab a stock that I like, and then I'm literally gonna buy some stock today. So pull out your phone if you have an app or something, and you know Robinhood or something on your app. Let's buy some stock together, shall we? And again, this is not investing advice ever. I do not give investing advice on this platform. But what I do is I do something called what Dr. Boyce is buying. So I will tell you I'm going to grab a stock that I like, and then I'm going to tell you what that stock is. And if you choose to invest in the same stock, you can, but I am not giving you investing advice. Can we agree on that? Do we agree? All right. So I see the yeses. Okay. The stock I'm going to buy is I'm going to buy some more shares of Micron Technology. The ticker symbol is MU. MU. The company is expected to see some increases in its price, although nothing's guaranteed. But I am going to buy some shares of Micron Technology. So let me jot that down, and I'm going to literally buy it as we're talking because I believe in being action oriented. So when it comes to your investing, just do it. Don't be scared. Don't sit around thinking about it. Just do it, buy it, own it, and have it, and then you'll be an investor. So now I'm in business with Micron Technology. It happened this fast. That was impressive, right? It's pretty quick. Um, and the reason I like to buy stock in front of you is to show you that it's not a big deal. It's not something that you should be sort of contemplating for weeks and deciding like, oh, I don't want to do it wrong. You can't do it wrong. You can't do it wrong. Remember, Burton Malkiel in 1971 wrote that book called A Random Walk Down Wall Street, where he taught monkeys how to invest. So if you're smarter than a monkey, then you can be an investor. How many of you are smarter than a monkey? If you're smarter than a monkey, raise your hand. If you're not smarter than a monkey, then don't raise your hand because monkeys probably wouldn't even understand that question. All right. So anyway, if you guys have a question you'd like to put in the chat, pop it in there. And also, just so you know, if you want to get profit alerts and stuff like that, you can actually text the word stock to the number 87948. Text stock to 87948. And I'll send you guys profit alerts periodically when I see stuff that I'm gonna buy, like Micron. So Micron is one of the companies I am now an owner in. And the other reason I just love stock ownership is because it just gives you a sense of pride. You own something. You are in business with a certain company. Our daughter, her friend came over and spent the night, and she works at Starbucks. And when she said Starbucks, I said, "Oh, I own a piece of Starbucks. Our family is a shareholder in Starbucks. You all have a new CEO. How's it going? What's it like working at Starbucks right now? How are things going?" And she was telling me, and it was just kind of cool to be able to say, "Yeah, yeah, we own that. Like when Starbucks does well, we do well." And that just is to me the best way to own the company out there. And the other piece of it too is this. I was listening to a guy named, I think it was Raphael Boston. I think that's his name. Maybe I got his name wrong. He's a nerdy looking bald black dude, but he's super, super smart. But maybe I'm a nerdy looking bald black dude. I don't know. Anyway, basically, what he was talking about is that the economy, you kind of have a tale of two economies where there, and I've talked about this before, and I thought it was great to see somebody else on CNBC really talking about this. As you said, that a lot of people just get confused because I did a survey, I did a poll on my Twitter. My Twitter is Dr. Boyce Watkins 1, and I said, "Do you think that we're in a recession?" And a large percentage of people basically said yes. But if you look at the economic data, it pretty much says that the economy is going as fast and as strong as it's going to go. The economy is not going to get much better than this. So you're like, well, what's going on? Why is it that if you ask regular people how the economy is doing, they all say, oh, it's terrible. And the people that are at the top that are doing the numbers are like, "Doo, doo, 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 doo. Oh, the economy's great. It's booming. This is an amazing time to be alive." Well, the disconnect, and he mentioned this, and I'm so glad he mentioned this, is he said it's exposure to he called it exposure to equities. All that means is that people that don't own stock feel differently about the economy than the people who do own stock. If America's doing great and you don't have a piece of America, then you're not going to do as great as the rest of America. Owning the stock market is owning a piece of America, and America is one of the strongest economic engines on the planet. Yes, we do have the issue with debt for sure, but we are damn good at making money. We are damn good at making money. There's no other country on earth that could sustain that much debt. Let's just say it like that. And so basically, again, I've reiterated to you guys that the all the studies show this. When I was doing research at Syracuse, I was really fascinated by the fact that stock market participation was a leading decider in whether a person was going to be wealthy or not. So the way to kind of look at it is it's like, let's say you're walking down the road and you're going 2 miles an hour, and someone else is on a bullet train that's going 100 miles an hour. And someone says, well, how fast, let's say you're both black, and they say, how fast are black people going down the road? And someone says, oh, they're going 100 miles an hour. I saw a whole bunch of black people on the train. But if you're not on the train, you're going 2 miles an hour, but the train's going 100. Well, you got to get on the train. The economic train is in the stock market. Get on the damn train and stay there and get you a double seat. Book your whole family a ticket, because that is how you move ahead in this country. Okay. Got it? Give me a yes if we agree, so I can feel like I did something good today, because y'all know I'm a little tired. I need something that's going to pump me up. All right. So what I'm going to do is, hello, Amani. How are you? I see you in there, and I appreciate you for helping to feel things. I want everybody to know, in the Black Business School, if you have any questions, any issues with anything that you're working on, anything that we can offer or that we're doing for you or not for you, just email our support team. Our support team is support@theblackbusinessschool.com. That's support@theblackbusinessschool.com. Second of all, last night we spent the whole night talking about stock options. There were several hundred of you there. I delivered something that I was really excited about, because it was literally a breakthrough in my own portfolio that I was very happy to share with you, and I have a lot of confidence that it's going to work. It wasn't investing advice. I do not give investing advice here ever. However, it's something that I'm applying to my own portfolio that I'm extremely happy with. And you saw that we used that example with a firm, and was basically showing how a person could easily generate a few hundred or a few $1,000s a month just selling the options and buying the puts in a specific way. This to me is the best way to make money. Then it's much better than real estate or anything else. We compared the returns to real estate, and the returns don't even compare. And then when you consider the fact that there are fewer headaches with selling options than there are with owning property, I thought it was just an awesome experience. I was excited as you guys were. So if you want to see the recording of that, just log in, go to your Prime login, drboyceprime.com, drboyceprime.com, and you can see the recording. Chanel says she'll have it up there in the next 24 to 48 hours, and you can go take a look and watch it again. I think it's worth taking the time to do that. And we'll do another Prime meeting again soon, and kind of go through that process. All right, so let's see what else is happening in the economy. One other thing that came to mind was just in terms of stuff that people are talking about. I saw a lot of people were talking about this thing with Sean Puffy Combs. And I'm going to say this, and I mentioned this morning in class, that I wouldn't be surprised if he declared bankruptcy at some point, because bankruptcy, they call it bankruptcy protection for a reason. And bankruptcy protection is a way to protect your wealth. And I'd be curious to know how he's protecting his wealth, because the first thing they're going to go after is his money. He's got all these lawsuits for 10, 20, 30, 40, 50, $100 million. And then he's got all these attorneys that he has to pay to defend his resources. And then on top of that, his revenue it probably has dropped significantly because his brand has become so toxic. And I think that's going to put his wealth in jeopardy. And so one thing that I've mentioned to you all before, not to dance on Diddy's grave at all. I'm not here to do that, but I will say that it doesn't make a lot of sense to build a lot of wealth if you don't take the time to protect it. And the way you protect your wealth might be, for example, we talk about how health is wealth. And I know a lot of people who build a lot of wealth and they ruin their health trying to get money. They don't eat right, they don't exercise, they don't even take care of their mental health. And next thing you know, they're having all these problems, health wise, and that becomes very expensive. And one thing you cannot afford to do in America really is get sick. So they get sick and all the wealth is gone. So then the point is like, well, what was it all for? Why'd you do it all for? Why'd you do all that stuff? Well, the same thing would be true with, say, a rapper. I came to this conclusion. I said the worst profession in the world is to be a rap star, because it's not just that you're living in hell, but you went to hell thinking that you were going to heaven. So you thought it would be heaven, but it turns out to be hell. Because I said, gosh, look at how many rappers have died from drug overdoses, how many have been shot, how many of them have gone to prison, how many of them have been murdered. And a rapper dies every single month. And then all these experiences have financial consequences, right? You get in a fight at the club, somebody sues you. You get into crazy situations with women, somebody sues you. You get into these other scenarios that involve drugs. Drugs are very expensive, and so it's really really draining financially, but also in terms of your spirit. So it's really the worst profession in the world. But I think Diddy is going to end up losing a lot of his wealth. I think other rappers are probably shaking in their boots because they're going to be next, because rappers are kind of the easiest financial target in the world if you're an attorney, because rappers, unfortunately, were misled into believing that they could live a life where they are free to do whatever they want. They could break the law. They felt like they were above the law, but really you weren't above the law. You were always black. You were beneath the law, which means that now they can go back and look at all of your behavior over the last 30 years, and they can scrutinize it from a legal perspective. It wasn't legal when you got mad at that guy and decided you wanted to punch him out because you want to keep it gangster. It wasn't okay that you decided that because that girl was cute, you could just take whatever you wanted. It wasn't okay for you to get involved in some other situations that are not going to look good in front of a jury. So a lot of attorneys are licking their chops because I think they see rappers as an easy financial target. It's like, you spent your whole life accumulating all this wealth just so I can come and take it from you. And so the protection of wealth is something that I think is worthy of a deep discussion for anybody that has it. And it spills over into so many areas outside of just little things like insurance. Like last night, we were talking about buying put options as a form of insurance, but it's deeper than financial instruments. It comes down to just literally who your friends are, the kinds of company you keep in terms of men and women sexually and all this other stuff. The situations you allow yourself to get baited into. You get baited into the wrong situation. Next thing you know, you're tangled up with somebody who has nothing to lose. So I would say that as you watch Diddy burn, which they're gonna burn him up. He's public enemy number one. I encourage you to talk to your kids about it and kind of help them learn some of the financial lessons that come from that, because I wouldn't be surprised if he ends up bankrupt. And it's not the first time. I mean, Bill Cosby probably lost $500 million because of the things that happen with women. So anyway, how big of a deal is the Fed cutting interest rates? It's a very big deal. We've been waiting for this for a long time. They cut interest rates almost like as an economic steroid to the economy. So these steroids are good. They're going to boost your stocks. You're going to make money. It's going to be great for you. Now, here's the deal. Nobody knows exactly what the economy is going to hold. Nobody knows what the market's going to do. But I wouldn't be surprised if they do a 50 basis point cut. I fully expect that the market will react favorably to that. But even as we move up to the announcement of the cut, you're seeing the market kind of creeping up. So you had a really good day. I think the day before yesterday, or maybe it was, no, was it yesterday or the day before? I can't remember. I get the days mixed up. But anyway, you in the last trading session or two, you've had some really big positive price movements in a lot of your stocks. And I fully expect this is going to continue. I don't see any reason why the market isn't going to remain strong. And if you're concerned about that, then that's what put options and stuff like that are for. All right. Now, let's see what else is going on. Let me read this article about the S&P so we can kind of see what's going on. It says here on CNBC that the S&P 500 hit a record high Tuesday, so we're hitting more records. So if you're not investing, just know that we're hitting these financial records every single week or every month or two. It's kind of crazy. The S&P's move to an all-time high comes during a historically tough period for the market. September has been the worst month for the benchmark over the last 10 years, averaging 1.3% as a monthly loss. Traders also overcame late summer headwinds stemming from concerns over the health of the U.S. economy. So they are concerned about the health of the economy. Disappointing jobs and manufacturing data in August sparked a large one-day sell-off. However, equities were able to rebound thanks to more constructive data releases and expectations of the Fed lowering rates. What else? Wall Street is on standby for the Fed's long-anticipated rate cut Wednesday afternoon. So Wednesday afternoon, keep an eye on your stocks. Tomorrow afternoon, that's when they're going to cut interest rates. A move that could help boost earnings growth for companies following a backdrop of steep borrowing costs and high inflation. The Fed first embarked on its aggressive hiking campaign in March of 2022. The latest retail sales data indicated solid consumer health. So consumers are spending. That's what they need. They need you to keep going in debt so they can keep the economy going. Retail sales rose by 0.1% in August versus economists' estimates of a 0.2% decline, excluding autos. While investors expect a cut on Wednesday, the market is divided on the sides of the potential reduction. Traders are currently pricing in a 59% chance that the central bank eases rates by 50 basis points, according to CME Group's Fed Watch tool. That's up from a roughly 47% chance on Friday, but slightly lower than the 67% earlier forecast on Tuesday. 1 basis point equals 0.01%. A steeper rate cut may spark concerns about the health of the economy, according to some investors. Quote, a 50 basis point cut may further imply a downgrade of the Fed's view on the market. Remember, we started in the very beginning. I was telling you that the economy is one of those weird places where what people think about the economy affects the performance of the economy. So if everybody thinks the economy is doing bad, then guess what? The economy is going to start doing bad. It's like if my wife and I just feel like we're in a bad relationship, like if I feel like she's a terrible wife and she feels like I'm a terrible husband, then guess what? Maybe that makes me a terrible husband and makes her into a terrible wife. So a lot of this is about expectations and self-fulfilling prophecies. So with that being said, Microsoft is up. Let's see here. I'm looking to see if there's more information. There's also an interesting story about Amazon telling employees to return to the office 5 days a week. I even read that Zoom is starting to make workers come to work, which is really interesting because Zoom started the whole work from home stuff. I don't think that the world is going to be interested in going back to the office, though. I think that now that people have kind of been broken out of the brainwashing of believing that you're supposed to spend more time at your job than you spend with your own kids. There are millions of people who are not interested in that. And I would say to you that if you want to break away from that, then you really want to also embrace some of these ideas of other ways to make money, like, multiple revenue streams, having that small business. Looking at stock options, things like that. Those are great ways to make money. A lot of you sell stock options and make more money than you did on your job anyway. So there's a lot of different ways to make money out here. I think it's great for you to continue to explore that. And if you're not sure, maybe form a family investment group, get together with relatives and just talk through stuff, on a regular basis, and you'll find stuff out there. Now, Kevin Lindsay says, Dr. Murphy Watkins, you're good. Does that mean, what does that mean? That I'm Dr. Murphy Watkins. Sorry, you got to explain that, Kevin. I don't know I don't know what that comment is. Are you asking me if I'm good, but there's no question mark? Well, if you're asking me if I'm good, I am good. But thank you. You're good too. I appreciate you. Thank you. All right. So let's see. Next question. Errol Semengolf says, "What time does the Fed announce their decision tomorrow?" I couldn't find it. Sometime in the afternoon. I got to double check. Let's say 1 o'clock, 2 o'clock, something like that. I'll find out the exact time though. Karen says, "I have a $4,000 profit from investing, but I have credit card debt with interest rates of 30%. Is it smart to take the profit toward the credit card debt?" I say yes. There we go. That's my answer. Yes. Yes. But one thing I would not do is if I had, let's say I had $10,000 and I had $10,000 in credit card debt, I wouldn't use the whole 10,000 toward the credit card debt, um, because you want to have cash. Liquidity is important. Liquidity means that you have access to your money in case you need it. If you pay off the credit card, you might feel like you have access to cash because you've got this credit card, but credit card companies all the time on a regular basis can just decide they want to cut your credit capacity, or they might cut your card just for whatever reason. So I'm a big believer in just having some cash available. Was that financial advice? No, it was not. That was just my opinion. But thank you, Kevin, for asking that question. Was that financial advice? No, it was not. I never give financial advice ever. Give me a yes if we all agree and we understand that I do not give financial advice on this platform. I want to make sure I say that. All right, so let's see. Doc says, let's see. Trey says, "How many shares of stock do you have to own to start trading options?" 100 shares. You have to, if you buy options, you have to buy them in blocks of 100. They call those contracts. If you sell options, you have to own at least 100 shares of the stock to sell what is called a covered call, or to sell a cash secured put. You do that in hundreds. Everything's done in hundreds. So if a stock is $9.80 and you want to sell covered calls, you have to spend 980, or sorry, $9.80 times 100, which is $980, and then you can get started. So and then you have to get permission from the broker, but that's not hard. You just have to apply, and then it goes through. And so that's a good way to make money. If you want to, I have a training called, if you're interested and you're just getting started on this stuff, I have a free training called "How to Make Money Without Working." You can, if you text the word money to the number 87948, you will receive a link right back with that training in it, and you can watch the video and just feel free to act on whatever you see in the video. So text the word money to the number 87948. All right, so let's see here. Errol, I think Errol's, yeah, that's right. Errol's going to be speaking at the All Black National Convention this year. Errol's a great guy, and Errol's also in the Prime program. Say hi, Errol. Say hello to everybody in the chat, because I think Errol's just a cool dude that everybody should know. And he does Sunday sessions with the Prime students. He calls it subprime, which I think is a great idea. And anyway, that's another session that's available for anybody that is going through the Prime program and learning how to sell stock options. So feel free to go to drboyceprime.com if you'd like to take a look. All right, so Sherelle, how can I use my Stash account to buy options? I don't think Stash lets you buy options. Last time I checked, it didn't. So you might have to try E-Trade or Robinhood or Fidelity or Schwab or something like that. How do we get in his Sunday sessions? Email support@theblackbusinessschool.com. That's support@theblackbusinessschool.com, and they will help you find that, Cheryl. Or sorry, Fochetta. Sorry, I thought it was Cheryl that said that. It was Fochetta. That's a great name. All right, so let's see here. All right, so let me find. I find you humorous. You remind me of Eddie Murphy. Oh, Kevin, so I remind you of Eddie Murphy? Oh, wow. What a compliment, man. That's crazy. All right, so let me give you some other quick stats about what's going on in America. Average credit card debt, in case you're wondering, the average household has $6,500 in credit card debt. Collectively, Americans owe about $1 trillion in credit card debt, which is an all-time high. Interest rates, the average credit card interest is about 20%, which is really high. And the percentage of Americans with credit card debt, about 55% of Americans carry a balance on their credit cards month to month. So generally, if you are doing better than most people, that typically means that you don't have credit card debt. If you know, the above average person doesn't carry a lot of credit card debt. Also, if you are a person who contributes to your 401k at the highest level that you possibly can, you're doing better than most people. If you invest regularly, you're going to do better than most people. And also, if you have an emergency fund, less than 40% of Americans have an emergency fund that can cover $1,000 expense. It's much easier to build emergency funds if you have things like a family. If you like I know people, crap on marriage because they think marriage is all about finding somebody who's cute and having sex with them. But marriage is also about economic partnership and supporting each other. I talked to you all this week about how my wife went and bought a car, and she bought, I mean, when I say my wife went and bought a car, my wife went and bought a car. I was there for moral support. I didn't do anything. I was surprised. And I didn't know what she was going to ask me to do and what I had to sign or pay. I mean, my wife can have any amount of money from me that she wants, but she likes to do stuff. And I literally sat there on my phone watching football, college football, while she was talking to the person signing the documents. When they asked for the down payment, she went and got it. She picked whatever color she wanted and all this stuff, and I mean, sure, I guess I could have been like, I'm the man, woman, do what I say. I don't live like that. I believe in letting people do what they want and supporting them. And I was really intrigued by that. I was like, oh, this is kind of cool. Like this is not, there's no stress here. So I encourage you, don't underestimate the power of having a partner that can do some things for themselves. But then of course, we always have to sort of know that we need each other too, right? So my wife will be the first one to say, yeah, I need my husband. She ain't no strong black woman who don't need no man. And I'm not a guy who says, oh, I don't need nobody. I just have me. No, I need my wife. She needs me. We need each other. And that's to me, an ideal situation. Not to say anything's perfect though. I mean, I'm not putting our marriage on a pedestal or anything, but I just want to give any young person who has that same mindset, especially, or anybody of any age, just give you encouragement, because I know that we live in a world where selfishness reigns supreme. Everybody's sort of told to think about themselves first. Like I joked with my dad. My dad took care of me when I was 3, and I wasn't his biological son. And I have 3 kids in my house. I'm not their biological father, but I love those kids. And I laugh with my father. I say, yeah, now you got all these guys saying, well, why would you take care of kids that ain't yours? You stupid. That makes you dumb. And I said, I guess we're both stupid and dumb. But guess what? My father took care of me when I was a baby. He invested in me. When he got older, now I'm there for him. I paid his house off, like so there is an ROI that you can get by being good to other people and supporting other people. And that is how you create economies. Economies are created through reciprocity. It's created through generosity. Just saying, I'm going to really support you and serve you, and put my ego to the side, and hopefully you'll reciprocate. And you find people who also play the same game, like basketball. You don't want to be a person who passes the ball all the time, who has to pass it to a prick who never passes the ball back. Guys like that are not fun to play basketball with. You probably played with guys like that before. You want to find guys on the team who will get the ball to the person who has the open shot so that the team will win. So the same way you build a good basketball team is exactly how you build a good business. That's exactly how you build a good network. That's exactly how you build a good family. Everybody passes the ball. Everybody gets to take shots. That way everybody wins. That's how people win in this economy. They win as groups. You do not win in this economy as individuals. And the government wants you to be individuals. They want you to be isolated. They want you to be struggling to figure out how to pay the rent all by yourself. They want you to be going in debt all by yourself. They want you trying to run that raggedy business all by yourself. That is not how success is bred. Typically, you want to give yourself the best chance to win, and the best chance to win is through good people in your life and being good to good people, and that's how you succeed. All right. So, with that said, let me see here. Let's see if there's any more financial news that we should cover really quickly. And by the way, the stock that I picked today, in case you were late, it was Micron. See, I forgot that quick. My MU, the ticker symbol is MU. But that was one that I researched, and I came to the conclusion that it was undervalued. And yeah, it's a Micron Technology. Sorry, Micron. This ends with an N. It's up a little bit today. It's up by about 1.6%, but it looks like it has a ways to run. And now, but there are some people who feel that the stock is struggling. Now, if you look at bar chart, the stock was down 44% earlier this year. And I bought it under the expectation that I believe it's going to recover some of that loss, that maybe it was oversold, because the market tends to be a drama queen and it tends to overreact when it murders the stock for bad news. So this is kind of a company that's overcoming bad news. So it says here in bar chart that while many large cap semiconductor stocks are outperforming the broader equities market, Micron is trailing by a wide margin. Valued at $96.7 billion by market cap, Micron is down 44% from its market highs of 157 set this past June. Let's see. So here it's basically saying, okay, so here's the question. Is Micron stock undervalued? I just bought some, so apparently that's how I feel. Micron Technology designs, manufactures, and sells memory and storage products globally. Despite the recent pullback, Micron stock has more than doubled investor returns in the last 10 years. While the semiconductor industry is cyclical, Micron is well positioned to benefit from the AI megatrend. For instance, demand for memory chips is expected to soar with the proliferation of large language models such as ChatGPT and Gemini. Micron's memory chips are part of NVIDIA's new H200 GPUs. According to Micron, its high bandwidth chips offer a higher capacity and are much more energy efficient than rival chips. In fiscal Q3 of 2024, which ended in May, Micron's data center revenue rose by 85% year over year. So, what probably happened, I'm guessing, is that maybe the stock got overpriced. That because there was the AI boom and because Micron had a piece of that action, we got to the point where they said, the stock is worth $157 a share. When a stock moves up like that, it's very, very fragile. When it moves up like that, any little slither of bad news can collapse the price of the stock. So apparently this happened with Micron when analysts downgraded the stock. But remember, just because they downgrade the stock does not mean the stock is worthless. This is a $100 billion company, damn near. So they are still a pretty powerful firm. So let's keep reading here. It says analysts expect sales in fiscal 2024 to rise by 61% to 25 billion. So they have very high expectations. So sometimes a company doesn't meet expectations, but that does not mean it's a bad company. It's like you expect LeBron to drop 36 points every game, and he has one night where he drops 29. He still had a good game. He just didn't drop 36 points. Do you understand? So right now, Nvidia and all these other companies, they're kind of the LeBron Jameses of the stock market. While the top line might expand by another 53% to 39 billion in fiscal 2025. So this company's going to be making money hand over freaking fist. So there are some people who apparently see this as a buying opportunity. Wall Street experts expect Micron to end fiscal 2025 with adjusted earnings per share of $9.42, indicating a relatively cheap forward price to earnings multiple of less than 10x. That tells me everything I need to know. That last sentence got me over the hump. Why? Why, boys? Well, let me tell you why. Because when they tell me that the forward price earnings ratio, which is the price of the stock divided by the expected earnings next year, is less than 10, that's extremely low for stocks that are in that industry. NVIDIA's forward price earnings ratio, I would imagine, I don't have the exact number in front of me, but I bet it's much, much, much higher. So I would argue that NVIDIA has a much higher probability of being overpriced than Micron, which is why, even though my wife and I made $100,000 from NVIDIA stock, I have not bought one single share since the stock took off. I have not bought any. Whenever something becomes that popular, I don't want it. Whenever everybody wants something, I don't want it. I usually go in the opposite direction as the crowd. So when NVIDIA became super popular and the price got pushed way up, I said, I don't want a piece of that because I think the company is overvalued. Maybe I'll wait until it crashes. When NVIDIA crashes, that might be a good day because then maybe I'll go buy some more. All right, so let's keep going here. A key reason for Micron's underperformance can be tied to a recent slew of analyst downgrades. Last week, BNP Paribas Exane analyst Carl Ackerman issued a double downgrade on Micron from outperform to underperform. So they went from expecting the stock to outperforming to expecting it to underperform and cut the stock's price target from $140 to $67. Now, how much did I pay for my Micron stock? Let me see. I think I paid 89 for it or something. Let me check to see what the price is. I believe it was about $89 or something like that. Let me see here. Hold on, give me a second. The price is $88.45. So I paid more than what he thinks it's worth. So just so you know, so that means he and I don't completely agree. All right, so let's see. Let me keep reading here and I'll tell you more about the company since we can kind of have some fun in analyzing this stock, even though it's not necessary to do all this. But it's kind of interesting from an educational standpoint. Quote, while some investors correctly anticipate downward risk to the near-term results, we think Micron will underperform AI peers through 25. The analyst added that the capacity oversupply of high-bandwidth memory chips would lead to a faster than anticipated market correction. A market correction is it looks like a crash. crash. It's when the stock price collapses because the market corrects its assessment of what the company's worth. Also, last week, Raymond James lowered its price target on Micron stock from 160 to 120. So he's a little more optimistic, but he thinks that the stock is truly worth 120. Analysts do this. Basically, the reason that you see one analyst who's super smart, who studies the stock, saying that the stock is worth 67, and another analyst who studies the stock and pays close attention, who thinks the stock is worth 120, is because nobody really knows what the stock is worth. Nobody knows. You'll only know after it happens. It's like if I'm watching, if I let's say you have two analysts on a sports show, right? Do you know that show? I think it's called Get Up with Nick Wright and Nick Wright and Chris Broussard on that show. Do you know I know both of the guys, both of those guys? Chris Broussard is a great black man. He's been on this platform many times. I love this guy immensely. He's a great friend. And Nick Wright, he's a white dude, but he's married to like a black woman, which means he's a smart man. Nick used to be my producer actually when I was at Syracuse. I had this little crappy little radio show that nobody listened to back then because back then nobody paid attention to what I had to say. And Nick was my producer. And I'll never forget, one day I was on the Colin Cowherd radio show and I told Nick about it. I said, yeah, there's some guy that wants to interview me named Colin Cowherd. And he was like, you are on the Herd? Oh my God, you're going to be on the Herd? That's amazing. And so anyway, now Nick works with Colin Cowherd. It's crazy. I love that. I'm so happy for him. I'm so proud of him. He's a really good guy. But anyway, with that being said, so let's say you're watching a sports show and the Cowboys are going to play the Eagles and you have two smart analysts who've been studying the Cowboys and the Eagles all season and they give their assessment of what's going to happen in the game. So one person says, I think the Cowboys are going to win because Dak Prescott and CeeDee Lamb and, Ezekiel Elliott and whatever, right? And then the second person says, no, I think the Eagles are going to win. Look at that defense. Look at the tush push. Look at how good their quarterback is, right? So here's the thing. The question becomes, well, who's right? Who's correct? Is it the person who thinks the Cowboys are going to win? Or is it the person who thinks that the Eagles are going to win? Well, you don't know who's right. You have no way to know who's right until the game is played. You will only know who's correct once the game has been played. Because what these guys are basically doing is they're doing a form of quantum physics. They're looking at the spectrum of potential outcomes. Tell me if you're kind of following this. I'm getting a little bit little theoretical here. They're looking at all the possible outcomes. They're looking at, well, here's what's going to happen if the Eagles defense takes over. Here's what's going to happen if the Cowboys offense gets moving. But you don't know if the Cowboys offense is going to move. You don't know if that's going to override the defense, right? So basically what they're doing is they're kind of just looking at all the possibilities and making an internal decision about which outcomes are most likely to occur. Because the truth is that if the Cowboys and the Eagles play 10 times, one team is probably not going to win every single one of those times. There's not one outcome that's guaranteed to occur. So both of them are right and both of them are wrong. The only person that really knows what's going to happen might be, you could say, God. God knows, because maybe if you believe God's all-knowing and he can see the future, then he knows what's going to happen. Nobody knows. So no analyst really knows what this stock is worth, because what they're really trying to predict is how much money the company is going to make. And they're putting it into this present value of this future cash flows model. That's the discount model that they use to value all assets in the entire universe. And they're coming up with a number. And so really, the only way we're going to really know what this stock is worth is if we get a time machine and we move 5 years into the future and we look back, then we'll know for sure. But so until the Cowboys and the Eagles get on the field and settle the score, you will not know who's going to win that game. Nobody's right, nobody's wrong. It's just both people have intelligent opinions that can, at most, simply provide information about which variables are likely going to play a part in the outcome. Do you understand what I mean? So if you're analyzing this game after it's over, you can go back and you can listen to their commentary and learn from it, learn about what they're looking at and what matters and what the factors are. But you don't know, neither one of them really knows. So if anybody ever says, I know exactly what this stock price is worth, or I know exactly what this stock is going to do, or I know exactly whether you should buy this stock or not, they're lying to you. They're lying. It's wrong. It's a lie. I've read all the thousands of research papers now. This is not me talking with my opinion. This is me talking based on scientific research. The data and the research says nobody can predict what a stock is going to do, especially in the short term. They call that the random walk hypothesis. Look it up. It's one of the most significant theories in all of finance. So don't believe people out here on the internet that tell you, oh, you got to buy this stock because this is definitely going up. This is definitely going down. No, you don't know. The best thing you can do to prepare for that is to keep making as many good investments as you can and make sure you're diversified. Never get to the point where you are so focused on one stock that this one investment that you're about to make is going to make or break your whole life. There is no one investment I know of out there where you can flip your $500 into 5,000 and do it in 2 weeks. Those investments don't exist, so don't believe any of that hype. All right, so let me go back here a little bit. Let's finish reading up on Micron. So let's see here. Morgan Stanley piled in on this past Monday and lowered its price target on Micron to $100. So in a way, you could argue 2 out of 3 we're kind of right based on 2 out of 3 assessments. First guy says this stock's only worth 67. Second two say 120 and 100. We paid 88. So if you follow majority rules, which would be just me making up a rule in my head, it would say, well, at least I'm kind of going with the majority of the analysts. Alternatively, Citi remains bullish on Micron stock as it expects the company to benefit from strong DRAM pricing, which is forecasted to rise by 66% in 2024 and 14% in 2025. Despite the recent string of negative notes, the consensus on Micron strategy is still a strong buy. Out of over 27 analysts covering the stock, 23 recommend strong buy, 2 recommend moderate buy, 1 recommends hold, and 1 recommends strong sell. So what does that say? That says that that there is one guy in there who says this stock is crap. You better sell this sucker. The price is still too high. But the other 26 analysts are saying no, this is a decent investment. So because I'm not an expert in Micron strategy, I'm going to go with the crowd here. And I'm going to do that consistently. And I'm going to do that across hundreds and hundreds of stocks that I own. And on average, I'll probably be correct. Do you understand? So don't ever get caught up in one stock that it becomes like the biggest thing in your life. You really want to own so many stocks that you can barely remember exactly what you bought. You want to buy stocks regularly as a habit. You want to sort of habitually do what rich people do. That will turn you into a rich person over time, but it takes time and you got to trust the process. Kevin says, so it's all gambling on some other level. Kind of, yeah. Not completely. It's not exactly like it. So it's more like, gambling is risk. And this is what you might call calculated risk. I don't gamble. I don't like gambling. I don't like going to casinos and losing money and all that. Because I don't feel like I have any control over the process. The closest I would ever come to actual gambling might be a game like poker, because poker is kind of a game of skill, psychology, and math and strategy. But there's still a lot of risk there, and I wouldn't even want to do that with a lot of my money. With investing, where the gambling aspect of it varies depending on what you're doing. Now, if you look online, you'll see a whole bunch of people that are buying and selling stock options. They're gambling. They're just rolling the dice. There's like, oh, so Amazon has an earnings announcement. Here's the options play I'm going to make this week. I'm going to buy me a bunch of calls or some call spreads or some butterflies or whatever, and this is going to make money if they have a positive surprise. That kind of becomes gambling, to be honest with you, because nobody can really predict whether the company is going to exceed or not exceed their earnings expectations, or what the forward guidance is going to be. That's what's happened with some companies, where they'll exceed the expectation. People will expect the stock price to pop, but then what will happen is the forward guidance will be so bad that the stock price actually goes down, which confuses the hell out of people. Our son went through that. Our son, he has Nvidia stock, and he was like, Boyce, I heard that they had a positive earnings surprise, so I thought the stock was going to go up, and I looked at my portfolio and it went down. I said, well, that's because what they did was they said, well, we got good news and we got bad news. The good news is that we exceeded the expectation for the money you thought we were going to make up to this point. The bad news is that we're not going to meet the expectation of the money that you think we're going to make going forward. So what they basically did was they gave a pile of information such that when you pull it together in a composite fashion, you come to the conclusion that Nvidia is worth less than what it was before. But it doesn't make it a bad company. It just means that there has to be a correction in the stock price. And for companies of that scale, tiny corrections 0.5% ends up being tens of billions, if not hundreds of billions of dollars. And so that's why your stock went down. So I don't think that the gambling side of the market is very interesting. I think all it'll do is it'll stress you out and take all your money. But there are areas of certainty that I think you can lean on when it comes to investing. One area of certainty is that there are 1,000 studies I could show you that show that if a person simply does the $5 a day investing plan and invests consistently every week a small amount of money in even a randomly chosen S&P 500 stock and does that consistently for 10, 20, 30 years, that person will have hundreds of thousands of dollars in wealth. This has been proven through scientific research. That's the certainty you can hold on to. That's how you're going to build your generational wealth. Now, if you haven't seen the $5 a day plan, it's free. Just go to blackwealthmasterplan.com and take a look. It's blackwealthmasterplan.com. So well, you're welcome. I hope that this helps you. All right. So what I'm going to do is look at a couple more questions and we can bounce out. By the way, I do have a book out if you want to go take a look, and we have financial flashcards for kids, stuff like that, in our Black Wealth Mastery store. So if you want to teach your kids or teach yourself even more, feel free to go to drboycebooks.com. That's drboycebooks.com. There's plenty of stuff there that you can get started with. All right. So good morning. I'm new to investing. I'm 56 years old. I live in LA with my wife and 3 boys. I'm seeking some mental assistance. Since following and listening to Dr. Boyce, what I've been running from, I can't outrun. That's my mental health. I need some mental health services and would love that as someone who looks like me. I'm asking if you guys have any connection with someone in LA. I realize this may not be a regular question. Well, good for you, man. First of all, I want to say congratulations to you. Let's clap for this brother. Just put like I don't know, put a proud of you. Give him some words of encouragement because I wanted him to know that we support him. Because I think it's hard for a person, especially us men. You know, we're all supposed to be all tough and everything. It's hard to admit when we need help, but there is help out there, and I think we should seek it. Help does not mean you're weak. Help just means you want to be better. So I applaud anybody that wants to get better. Anybody in here that's seeking self improvement. To me, that puts you in the top 10% of society because there are so many people who either don't believe or don't have the desire to have the discipline or to sacrifice to self improve. So I do support you and I commend you for making that remark. Second point, my wife happens to be a therapist, and her website, she sees a lot of clients. She sees them mostly virtual, though. Like she'll meet them in private Zoom meetings and stuff like that. And she'll see individuals, couples, and families. And she's fully licensed in this stuff and really good at what she does. She's a full professor of social work. She trains other therapists on how to be therapists. That's how good she is. So if you want to go take a look at what my wife does, schedule an appointment. Feel free to go to coachingwithdralicia.com. That's coachingwithdralicia.com. Another thing that I believe my wife's team might be able to help you with is she may have some therapist contacts in the LA area. One thing I would encourage you to pay close attention to is if you're seeking therapy services, which I think everybody should. I think everybody needs a therapist. A therapist is not somebody you go to because you're screwed up. It doesn't. You don't go to them just because you're weak. You go to them because you want to get in touch with your emotions. You want to have discipline, right? I loved talking to my therapist. It's the best because everybody's got stuff to process, especially when you're Black. There's so many things stressing you out. Why not get it all out? And then you understand yourself. The more you process this, the more you get to understand yourself, the more you understand the world. And then also, what it did for me was it helped me to find those pockets of emotional instability that I needed to work on so I could just be better at what I do. You know, and I noticed a difference. There was something that happened yesterday that burned me. I got so mad and I felt myself getting angry. And rather than reacting in my anger, I was like, okay, boys, you know the drill. We're not going to say nothing to nobody about any of this until we've thought about it. We're going to go sit on the porch, drink some lemonade, look at the sun, and take deep breaths. We're going to spend the day before we even respond. We're not even going to, and that just something like that can literally it can save relationships. It can save you in terms of business. It keeps you from kind of snapping off and popping off and saying stuff that you're going to regret. It'll save your marriage, all that stuff, right? So little things like that are really helpful. I encourage everybody, if you want to be better, get inside your brain and start finding those little areas of deficiency that you want to fix, or the areas where you're not quite where you want to be. And the other thing too, I really believe this too. I think the most important role I have on earth is the head of a household, like, because I'm impacting everybody in this house is impacted by what I do and what I don't do. I take that role very seriously. So what I also believe is that I know that the better I am at just simply existing as a human being, and the better I can make decisions and the more I can empathize with other people's emotions and connect and understand my environment, the better I'm going to just be as a husband and a father. And then also maybe it translates when I'm talking to you. Maybe I can get better at this because I have some responsibility, right? Because you listen to what I say. So I try to process it as much as I can to make sure I say something that's going to truly help you. So anyway, that's my 2 cents. Congratulations to you. Don't feel overwhelmed by the stress you might feel mentally from the position that you're in. Also, because you have a wife and 3 kids, you're 56 years old. The Surgeon General just issued that warning, basically saying that parents in that age group are pretty much stressed out like crazy from dealing with the kids, dealing with financial issues, dealing with the job. And then also, you're in what they call the sandwich generation. So, the sandwich generation, I think, is about age maybe 40 to 60, where you've got young kids in the house that are young enough that you have to take care of them, and you got aging parents at the same time who still need stuff from you. And that's exactly my life. My parents, older, sicker, need stuff. Kids still young enough where they're getting on your nerves and need whatever kids need. And so that does require some mental health support so you can make sure you're taking care of you. That's my speech about that because we know health is wealth and all this other stuff. All right. So Rain Angelo says, "Good morning, Dr. Watkins. Is there a way to take profits without selling your stock?" Well, you know what, Rain? I mean, partly selling stock options is a great way to do that because what you're basically doing is you're selling the upside of your stock. So the stock is priced at 50. There are people out there that think the price is going to go up to 55 or 60. You can literally sell a call option where you're basically telling them, if my stock goes up past 53 or 54, you can buy it at 53 or whatever, right? And you have to pay me for that. I generate income from that. That's a great way to generate income from your stock without actually having to sell it. Sometimes you can sell a little bit off, shave off some off the top when the market's doing really well. That's pretty, and then there's dividends, of course, but dividends, unfortunately, you have to own a lot of stock to get enough in dividends for it to make a difference. Selling options is like a dividend, except it's like a dividend on steroids. So you're going to get a lot more income out of that, especially if you own, like you own, say, I don't know, 1,000 shares of we did an example of a thousand shares with Marathon, and I was showing how a person could make several $100s a month just with a small investment like that. So that might be something worth looking into. If you want to take a look and kind of get started on this, again, text the word money to the number 87948, and I'll send you the training how to make money without working. So text money to the number 87948, and you'll get a link sent right back to you right then, and you can take a look and see how you feel about that. All right, so I'm gonna get out of here, guys. I hope this conversation was beneficial. It was nice just chopping it up with you, and good luck with your investing. I'm definitely going to check in before the announcement by the Fed tomorrow. That's going to be a big deal. And also, don't forget that tomorrow night we do Powernomics training every Thursday night at 8. Sorry, every Wednesday night at 8:30. We do Powernomics training where we're reading Dr. Claude Anderson books. And I think that this stuff is important so we can understand our economic history and why we deserve reparations and just sort of how we can proceed politically as a community to build wealth for our families, ourselves, and also our people. So I believe this is my goal. I wrote a book called "It Takes a Village to Raise the Bar" years ago. It was a short book. It's probably out there somewhere for free. It's not sold anywhere, but it's out there. And in the book, I wrote about what I call Project 2070, where in project by the year 2070, I believe that B1 people can be the most financially capable, most financially intelligent group of people on the planet. If we simply embrace very simple principles, very simple ideas that we execute ourselves and that we pass on to our children, that can be our $1 trillion move. The big thing about being black in America is that you can't get so hamstrung on all the limitations of being black that you forget about all the blessings that come with living in the richest country in the world. There's nothing stopping us from making sure our kids get educated. There's nothing stopping us from learning about wealth. There's nothing stopping us from taking the money that we do make and investing it instead of spending it. The only thing stopping us there is us. So so ultimately, let's shift the mindset. Let's really embrace investing. I know that you care about financial security. I know you care about money. I know you care about wealth. So whatever we care about, that's what we should be doing because it's really fascinating to me that we are so disciplined for our bosses at our little black job. We'll be super disciplined, super committed to getting to our little black job by 9 o'clock. We'll stay there till 6 o'clock. We do exactly what we're told. We take the bathroom breaks when they tell us to. But then when it comes to building in our own space and doing what's best for us, the discipline kind of goes out the window. Even when you talk about politics, I saw people raising a whole bunch of money for Kamala Harris, but I said, okay, now can you go raise the same amount of money for your own community? Are you too busy solving other people's problems that you don't have the time and desire to solve your own? And if that's the case, then why is that the case? Who taught you to think that way anyway? Who taught you to put other people ahead of yourselves? So I think that we should be a little bit selfish, turn inward, turn toward each other, turn to the kids, teach the kids, pour into the children, and then we don't have to worry about whether or not other people are investing in our kids because we got this. We got this. So the opportunity's there. I think that we can. There we go. Thank you, Amani. Amani's so good. She put the link in there. So if you guys want to grab a copy of "It Takes a Village to Raise the Bar," there it is. It's right there, and you guys can take a look at it. And it's not that long, but it lays. I wrote it in 2013. We are in year 11 of that 57-year plan, and everything's going according to plan. Everything's going according to plan. I mean, if you look around now, back then when there wasn't, back then there wasn't hardly anybody really talking about wealth on a regular basis. And that was my goal. My goal was like, okay, I'm going to keep going every single day. I'm going to get online, talk to thousands of people in my community every day about Black wealth, about Black economics, about what happens with Black families, share everything I learned in my PhD program, and then hopefully other people will start to do the same. And now I went to InvestFest. There's 20,000 people together all talking about Black wealth, and I'm like, this is exactly what I wanted. This was my dream. And what's beautiful about it is that we're only in year 11. So what is really going to happen, what's yet to come, is when the kids start to grow up, when you have children that are just raised in the movement, when you have kids that were never ever built for slavery the way we were, when you have kids that were raised with resources, raised with basic economic training, taught about stocks and stock options at an early age, taught about real estate at an early age, taught about entrepreneurship at an early age, they're going to absolutely kill it. All you have to do is give them a plan and a capital base. If you give them a plan and a set of values that are consistent with building wealth in that plan, and then you give them a little bit of a capital base, they're going to take what you have and they're going to just absolutely obliterate the economic system in terms of what they can build. Why? Well, because they're not going to be distracted. They're not going to be so busy struggling at some racist job so they can pay back their student loans and then pay rent to their landlord that they don't have time to build for themselves. Look at how much time you wasted in your life at a job, paying rent, in the struggle. You can't do powernomics if you are playing strugglenomics. So in order for you to rise, first you got to get out the water. For you to fly, you got to get out. You're 50 feet deep in the water talking about I'm trying to fly. How are you going to fly if you're trying not to drown? Do you understand? So many of our people are busy not drowning that they can't fly. So our kids, we're going to lift them out of the water. They're going to start in the sky. They're going to know how to fly. They're going to be given a flight plan, and they're going to go out here and they're going to go to levels that we can't even imagine. So the first 11 years happen quickly. It's amazing. It's awesome. But it's nothing compared to what's going to happen after we're dead. So God bless you. Have a good day, everybody. Thank you guys for listening. And I guess I'll see you in class tomorrow morning. If you don't have an invitation to Money in the Morning, our economic elevation class, we do this 7 days a week. Text the word morning to the number 87948. Everything's 87948. I just give you different words based on what you're interested in. So the Black Business School is here for you. We got your back. And